Magna Mining has seen a flurry of activity as of late. Most recently, they released an updated preliminary economic assessment for their past-producing copper-nickel Green Hill project, which is located in the Sudbury Mining District. The assessment, which was released weeks ahead of schedule, follows the company last week being the talk of the Precious Metals Summit in Beaver Creek for a day after the acquisition of a producing mine in the same region. Let's dive in. Okay, so yesterday, Magna Mining released an updated PEA with positive project economics for the Green Hill project. The PEA outlined an after-tax net present value of $194.1 million, using a mine life of 13 years based on $8.50 per pound nickel and $4 per pound copper. Now, at the time of recording, nickel is currently trading around $7.40 per pound, so they went a little higher on the price of nickel than the market currently sits at, but on the price of copper, it currently is trading around $4.30 per pound, and they went with $4. Now, we'll get into the specifics of the envisioned mine here in a second, but one thing that should be highlighted is the internal rate of return, or the IRR. On an after-tax basis, the IRR is estimated at 129%, a simply unheard of figure in the world of mining. This IRR is based on pre-production capital costs of just $28 million, meaning the company doesn't expect to spend much to get this asset into production, especially when you consider the advanced exploration names such as Dolly Varden raising $30 million in the markets just last month. There is a catch, however, in that the company also expects to spend around $32 million on an advanced exploration bulk sample. Even on a combined basis, however, at under $60 million, the expected CapEx spend here is truly minuscule. However, sustaining capital is estimated to come in around $213 million. It should be noted that the PEA used metal prices that are somewhat all over the map. Nickel pricing came in pretty high compared to the current levels, as I said earlier, while copper was lower. And the pricing of other metals has since changed a bit as well. In this regard, the company was nice enough to provide a simple breakdown of the net present value if we used the values on July 20th, 2024. These values reduced the after-tax net present value to about $135 million, which worked out to an IRR of about 53%. But since July 20th, the price of gold has skyrocketed. Copper's gone up a bit as well. Now, unfortunately for juniors, prices don't exist in a vacuum. And by the time this mine gets built, the current numbers will have changed again. Obviously, prices are volatile. So when we look at these numbers, we got to kind of accept that it is what it is. Okay, so the details of the mine. In short, the company expects to have an average production rate of 2,200 tons per day, which is further broken down into 1,650 tons per day of high margin primary feed and 550 tons per day of a lower grade incremental feed. All mining is to occur underground, with rehabilitation of existing facilities and infrastructure on site to occur as the mine gets developed. Ore pulled from the ground is expected to be crushed on site before being shipped to a local third-party processing facility. In terms of a development timeline, Magna expects the advanced exploration program to take roughly 15 months, to be followed by a 12-month pre-production ramp-up prior to commercial production beginning, which again is expected to last for about 13 years or so. Magna doesn't say specifically how much nickel or copper they expect to pull out of the ground on an annual basis. But in total, they expect to sell around 196 million pounds of nickel and around 170 million pounds of copper over the life of the mine. If we want to take those numbers and just do the math and average it out, that works out to around 15 million pounds of nickel per year and around 13 million pounds of copper per year. Of course, this would be a relatively unfair assumption. There's also some cobalt, platinum, palladium, and gold credits involved here, which we won't get into. But these materially add to the annual expected income of the proposed mine. All told, the mine is expected to generate average annual pre-tax cash flows of about $40.5 million, with the mine expected to have a payback period of about 1.5 years. Well, the PEA is a big deal for the company. It takes a bit of a backseat to the news announced last week, which is that the company is set to acquire a portfolio of base metal assets within the Sudbury Basin through the acquisition of a subsidiary of KGHM International. Included in the purchase is the currently producing McCreedy West copper mine, as well as 3 past producers, 2 of which produced copper and nickel in the last decade, and 4 related assets. Okay, so you're probably wondering how much ore did the West McCreedy mine pull out in 2023? The answer is around 318,000 tons. This consisted of about 1.59% copper, 0.23% nickel, 1.34 grams per ton palladium, with further credits in cobalt, platinum, gold, and silver. But unfortunately, we can't access the financial details of the mine, so that's about as deep as we can get. In terms of the transaction as a whole, the assets are to be acquired for $5.3 million cash on closing, as well as $2 million in Magna common shares. But there's more. A $2 million deferred cash payment is due by the end of 2026, with contingent payments of up to $24 million also being added on, dependent on certain milestones being hit. There's also a 4% NSR in play on new discoveries on certain properties included within the transaction. Now you're probably wondering, okay, well, where's the funding going to come from? Well, part of it's going to come from a credit facility worth around $20 million that is currently being negotiated with FCDQ, a subsidiary of the Desjardins Group. And in this entire purchase is expected to close by the first quarter of 2025. Okay, so let's wrap it up. The developments over the last 2 weeks have materially been a game changer for Magna, as demonstrated by the stock price, which is up 44% since the start of September. Not too bad for a nickel junior in this market. But that being said, it's a bit too early to get excited. In fairness to the bears on the PEA, the technical report has yet to be filed. The company has 45 days to do so as per exchange requirements. And on the asset acquisition, financial details of the operating mine weren't released. There's likely a reason they were able to grab these assets for such a cheap price. But that being said, it appears that there's a real asset here and a real operation. And that's more than many of Magna's peers in the mining space can even say. All right, everybody, thank you for watching. Please smash that like button, subscribe, and ring that notification bell. Also, if you are long Magna, give us your thoughts in the comments section. You think that this is a realistic play? Is this company ever going to be a producer and make money? Let me know what you think in the comment section, guys. Thanks for watching.